Okay, so this is the bearish trend line video. We've just done the bullish one. This is the bearish one. Same again. Concept of bearish trend lines is that its importance in trading is to make sure it forms a basis of predicting a market behavior. So it's like a resistance point for the trend. It bounces off it. It's complete opposite to the bullish side. Whereas the bullish side uses it as a support, the bearish side uses it as a resistance. To construct a bearish trend line, you need at least two significant high peaks. So touches on the top for the resistance rather than the bottom like it is for the bullish. These points should be the highest reached before the price actually retraced. Connecting the highest. So more ideal touches is usually two, but more than two is really good. I'd say three would give you a good basis of a solid trend line. That will help you then to make sure that you've got the right trend line in place and making sure that the high is obviously lower than the previous ones. Okay, so the slope, as you can see on the bottom, was on the bullish. This is now on the top. You can see that the straight line across the top, and you can see the slope of it hanging down. So you can see that it indicates a really good, strong bearish trend if the slope comes down on a diagonal rather than up on like it is on the bullish. Okay, so resistance levels. So in a downtrend, the bearish trend line acts as a resistance level. Prices often retreat after retracing from this line, reinforcing the downtrend. Traders may look to have selling opportunities each time that the price approaches the trend line. So, confirmation of a downtrend is when the presence of the downtrend is obviously stronger than it's been tested multiple times on this line. And that way, the trend line will make sure that it's held. And that would be an area where breakout traders would like to get into the market, or trend line traders will get into the market for continuations. As you can see, the angle on that has to be like roughly around about 45 degrees for it to be really strong trend line. And the steeper it is, the better the trend line, more robust for the downtrend. Okay, so just be careful of the pop-ups. You see how we've got two pop-ups, one here and one there. That could have given you an inkling that it was going to go long. It didn't. It fell straight back down, come back down, tap this line again, tap the line again, and collapsed. So you have to be careful of false breakouts and make sure that when you do come in, I usually won't go in for a trend trade on a trend line if it broke above. I would not come back below because they're looking for liquidity. I would wait for a tap into it like this, like that, and like that and that. They would be ideal places for me to jump into a trend line trade if I was going to jump into one. As you can see in this one, that's the areas I would look at if I was going to trend trade the trend lines. I would go from these areas. I would put extra ones in this one, and this one would be ideal places for me to build extra size into the trades. The same with this. If you were going to go on the first one, the second one would be the place where I would add extra size. This, I wouldn't add extra size. I would let this play out. And at this point here, when I see the rejection, I would add size in here, size in there, and take profit down there. Okay, stop loss needs to be above the high before you entered. If it's not, it's no good. If you use the stop loss too close, you will get stopped out. That was very close on me to being stopped out. This one would have been okay, and that one again was above the high. I usually go above the high, so when I would have entered, it would have been round about here. I would have entered, and it would have been stop loss above the high previously. So again, limitations with it. Drawing trend lines can sometimes be subjective, and sometimes the traders do get them wrong. It can vary, remember. So, false breakouts. I just told you before, false breakouts, you have to make sure that it's not misleading you with signals, giving you the wrong impression so that you change bias on the chart and your bias is then incorrect and you get stopped out. And again, lagging nature. All indicators really are analysis tools. They are not current live trading tools. That means that they're not always giving you the best predictive moves or future moves. Well, they don't give you very accurate either. So, bearish trend lines are a vital tool again in identifying and confirming downtrends, offering traders valuable insights into the market sentiment and potential price movements. However, they should be used with caution and ideally in combination with other analysis methods for a more comprehensive trading strategy. So this is Bearish Trendlines. This is Mike from Satoshi Trading. See you on the next video.